My name is Jembe Zita. You're watching Business News coming to you live from our Refill studio. Good morning. The British pound opened the first trading week of March 2026 with subtle fluctuations against the Nigerian naira, reflecting a market that is currently digesting the Central Bank of Nigeria's latest shift towards monetary easing. Real-time data from the Nigerian Foreign Exchange Market (NFEM) and informal DEX report shows the naira holding a firm line as it enters a new month of consolidated price discovery. This performance follows a significant period of stability for the naira, which has been bolstered by the CBN's decision on February 24th to cut the monetary policy rate by 50 basis points to 26.5%. The Apex Bank's move signals confidence in the current disinflationary trend and has encouraged a steady flow of liquidity into the official window, preventing the sharp sterling spikes that often characterize the start of a new month. Traders in Lagos and Abuja report that while demand for the pound for international travel and tuition remains consistent, the speculative pressure has largely vanished. The availability of foreign exchange through authorized channels has successfully anchored expectations, making the informal market a less attractive opinion for large-scale buyers. Sustained disinflation headline inflation showed for the 10th consecutive month, reaching 15.10% in January. This trend has restored some level of real purchasing power to the naira, making it more resilient against major global currencies. High oil production, crude oil production remains steady at 1.46 million barrels per day, ensuring a consistent inflow of foreign exchange that supports the willing buyer, willing seller model in the NFEM. Interest rate recalibration. While the benchmark rate was trimmed to 26.5%, the environment remains high yield, continuing to attract foreign portfolio investors seeking to capitalize on the naira's stability. The Nigerian naira began the new month on a note of cautious stability against the US dollar on Monday, March 2nd, 2026. Real-time data from the Nigerian Foreign Exchange Market (NFEM) and informal trading DEX indicates that the local currency is holding its recent gains as market participants react to a 13-year peak in foreign reserves and a sustained disinflationary trend. This reflects a slight adjustment from the closing rate seen at the end of February as the market finds a new equilibrium following the Central Bank of Nigeria's recent 50 basis point cut in the monetary policy rate. Market liquidity remains robust, with daily turnover figures supported by increased foreign portfolio inflows. The central bank's commitment to a willing buyer, willing seller model continues to anchor the official rate, preventing the sharp intraday spikes that historically fuel market uncertainty. The spread between the official and black market rate remains exceptionally narrow, currently holding at approximately 1%, a significant departure from the wide gap seen in previous years. Informal traders note that while Monday mornings typically bring a surge in demand from small-scale importers and travelers, the consistent supply through authorized channels has kept speculative pressure at bay. The convergence of rates suggests that the central bank's transparency initiatives are effectively discouraging hoarding. Several fundamental factors are supporting the naira's valuation as March begins. The Nigerian Exchange Group (NGX Group) has the recorded 15.6 billion naira profit before tax (PBT) in its audited results for the year ended 31st December 2025, up from 13.6 billion naira in the corresponding period of 2024. The exchange also declared 3 naira per share dividend and a bonus for 3 shares held by each shareholder. The results released weekend showed a double-digit revenue growth, improved operating margins, stronger liquidity, and a reinforced balance sheet, underscoring earnings resilience amid a challenging macroeconomic environment. According to the report released by Izuchukwu Akpa, acting company secretary of the NGX Group, the board of directors approved the 2025 audited financial statement at its meeting of 24th February 2026, following consideration of the report of the Board Risk and Audit Committee. Commenting on the result, Alhaji Umaru Kweranga, Group Chairman, stated that the 2025 performance demonstrates the resilience of Nigeria's business model and the effectiveness of disciplined strategic execution, strong revenue growth, improved operating margins, and a strengthened balance sheet reinforce commitments to delivering sustainable long-term shareholder value. He expressed confidence that the momentum that has been built in 2025 will be sustained, giving investor confidence in the Nigerian capital market and a pipeline of exciting new listings that will broaden and deepen the market. And still talking business news, oil prices soared and stocks fell in Asia on Monday after US-Israeli strikes on Iran sent investors fleeing the prospect of an extended conflict in the crude-rich Middle East. Brent briefly spiked almost 14% and West Texas Intermediate nearly 12% at the start of business after the attack on the Islamic Republic, which killed Supreme Leader Ayatollah Ali Khamenei and other senior officials. The bombing have also sent the vital Strait of Hormuz, through which around 20% of global seaborne oil passes, effectively shut and several ships attacked, fanning supply fears. Equity markets across Asia sank, with Tokyo, Hong Kong, Singapore, Mumbai, Bangkok, Wellington, and Taipei all deep in the red. US futures were down more than 1%. Still, Shanghai edged up and Sydney was flat. Airline stocks took a battering as they were forced to cancel flights to the region. Qatar Pacific sank 3% in Hong Kong. Sydney listed Qantas dive 5.4%, and Singapore Airlines was off 4.3%. Japan's ANA and JAL fell more than 5%. However, energy firms rallied, with Australia's Woodside Energy and Santos each jumping more than 6%, while PetroChina added almost 4% in Hong Kong. Impex in Japan was up more than 6%. Gold, a key go-to in times of turmoil, climbed 2%, while the dollar also saw a boost from a rush into safe havens. While the strikes have ramped up geopolitical worries, traders wound down their initial bait, with crude sitting around 5% higher and stock markets bearing losses. Brent had already rallied last week on growing concerns. Trump will order an attack as talks aim at curtailing Iran's nuclear program stutter. And that is it on business news. Stay tuned for News Track at 2 p.m. But before then, do enjoy the rest of our programs and have a very wonderful morning.